quarter as far as vectors are concerned, but a 25% growth in our bottom line, which is, I think, the starting point of all such press conferences. I think what is more important for us is what the sequential growth is, So one is the year-on-year growth, which is, of course, in the mid-20s, but you will see that the sequential growth also is pretty significant. So sequentially, our profit has grown by 6%. Before I come to actual numbers, I think the vectors that you watch really is net interest income. Net interest income has been well supported and has grown by a healthy 22%. Fee income has grown by 26%. Core fee income has grown by 23%. Very stable NIM. NIM is same as last quarter at 3.68. Very stable earnings profile, which means net NPA is at 31 basis points. Gross NPA has actually fallen by about 2 basis points. That's a good development. And the total credit cost for the quarter, the credit cost was only 8 basis points. And if you add the carry forward of provisions, then it's 13 basis points. So overall credit costs are well within our budgets. Net interest income, as I said, 22% and sequentially 6%. Other income 26%, sequentially 10%. I think that's one of the takeaways and the highlights on the sequential part of this thing. Therefore, revenue is up sequentially 8% and year-on-year 24%. And net profit, as I said, is grown by 25% and sequentially 6%. As far as the balance sheet is concerned, system growth has now come down to a new low of 9.3%, but IndusInd Bank showed a credit growth of 23%, and sequentially it was 5%. This has also been accompanied by the other side of the balance sheet, which is the deposits, which have also grown by 22%. The star in our liability side of our balance sheet is savings accounts. So while CASA has grown by 26%, SA has grown by 33%. So if you really aggregate our SA growth over, say, the last 2 years, then you're seeing that we have a compounded annual growth rate in our savings bank account of almost 32%. Those are the headline numbers for the quarter. For us, the real highlights, if you were to look at for the quarter, was the QIP issue that we did. That QIP issue launched around the 25th of June. The actual money came in on the 3rd of July. So you don't see the results of the QIP in terms of growth in net worth in the numbers that you have before us. There are two components to the equity raise that we did. One is the QIP, which is about 4,327 crores. And this is going to be followed very shortly, within 30 days, by a preferential issue. In favor of the promoters who diluted and are going back to their original holding of 15%. That's going to add another 750 crores to our equity raise, which means that by end of this month or early August, we would have raised a total of almost 5,200 crores. What that does to our capital profile is to make us very healthy in terms of capital adequacy. We have, as it is, we have a Tier 1 ratio. You see in this quarter, without the capital, we have a Tier 1 ratio of almost 11.55%. And with this money, our Tier 1 and our capital adequacy will go up to slightly over 16%. So we have now fresh fuel in the tank, and this should enable us to, work on the ambitions that we always stipulated in terms of what our credit growth is going to be, and enable us also to fulfill our ambitions in terms of expansion, both on the branch network, also on our client base. During this quarter, last quarter, if you would remember, we opened 74 branches, which is the highest ever that we opened in a quarter. This quarter we are working on a new modeling for the branch network. There is a whole digitization wave that is coming. So what are new branches going to look like? That remodeling is happening as we speak, but we still have our ambitions intact of doubling our branch network in this 3-year period and going to the 1,200 branches for this planning period, which ends in March of 2017. So I think those are the main highlights. Of course, the other questions are always around interest rates and yields and how they are moved and what the forward-looking view on interest rates is. So during the quarter, of course, we saw a 25 basis point cut in the repo rate, and we replicated that with a 15 basis point cut in our base rate. There's always this talk about transmission and whether transmission has happened to the extent that the repo rates have been cut since January of this year. Repo rates have been cut by 75 basis points. As you know, 3 cuts have happened. Transmission from the banking system has been around 20, 25, maximum 30 basis points. That's because, the cost of deposits have not fallen. They are falling, but I think yields are also falling. So transmission is happening in 2 ways. One is, of course, the base rate cut. And the other way of transmission, of course, is that your margins over base rate reduce. So you will see, if you make a presentation later, that yields have gone down, but cost of funds also went down accordingly. And therefore, the net interest margin was stable at 3.68%. Other vectors that have improved, ROA is stable at 1.90. ROE has actually improved. We have crossed again 20%, which we had 3 years ago before we raised capital. So we end the quarter with an ROE of 20.36%. I've already talked about NPAs, gross and net NPAs. Gross is down and net is stable. So that's a very quick summary of the quarter. I think in difficult times, this is pretty decent delivery to show a 25-26% growth in the bottom line. And more importantly, as I said earlier, supported by a good growth in the interest income and very handsome growth on the fee income, both core fee income and total other income. So that's a quick summary. Questions?